Chris, it's great to have you. Thank you for joining us.
Thank you for having me, Sarah.
So, brand new CEO, the stock chart is ugly. How are you going to convince investors that you're turning this company around?
Yeah, the stock chart is ugly, and none of us are happy with the stock chart. But we believe we've got a very strong plan to get the company turned around. We spent the last couple of months with the leadership team doing a full-scale capability assessment of the company and developing a new turnaround strategy. We just announced the new turnaround strategy 2 weeks ago and are very excited about the potential ahead of us to get the company back to winning in the marketplace, back to revenue growth, margin expansion, and strong cash flow generation.
So how is it going to work? Because you have a lot of brands. Some of them are good, and as a lot of these consumer conglomerates are, some of them not contributing.
Yeah, so let me give you a couple of the elements of the strategy. So one of the elements, as you mentioned, is to focus on the areas of the company that have the biggest opportunity. So if we look at the company's brand portfolio, we sell 80 brands across the company today, but 25 of those 80 brands represent 90% of the sales and profit of the company. So we're going to focus on those 25 brands. And what's important about those 25 brands is that over 2/3 of them are market leaders in their categories. And we think by distorting our resources in terms of innovation, advertising, and talent against those top brands, we can drive a more meaningful impact. We've also identified areas in the company where we need to make capability improvements. And so we're investing in capability improvements in things like understanding consumer unmet wants and needs, brand building, innovation, and go-to-market, which we believe can drive the company back to top-line growth. At the same time, we're changing the operating model of the company largely on the supply chain to centralize the supply chain so that we drive scale across the portfolio and create a better value for consumers as we come to market with leading brands.
Oh, that's interesting. Are you trying to undo, say, a legacy or many, many years of sort of bolt-on acquisitions where things just got a little bit too complicated?
That's exactly right. This company was built through a series of acquisitions that were never really integrated. And as a result, the company is a large company that really hasn't been operating with scale. We've made a lot of progress over the last couple of years on things like we've taken our SKU count from 102,000 SKUs down to 28,000, tripled the revenue per SKU. We've gone from 7,000 IT applications to 700, a 90% reduction. And now we're focused on the supply chain and leveraging the scale, doing the integration work from these many acquisitions so that we could become a scaled provider in the categories in which we compete.